Hi, this is Lara at Elliott Wave Gold with your extra video update for the Monday session dated 8th of August after the markets closed for the session. The trend is still up and the target remains the same at 1582. If we see a new price point by any amount at any time frame above 1349.25, then I would have more confidence in an upward trend and more confidence in the targets. There's enough bearish indication from volume still to warrant extreme caution with any long positions entered here. I've entered another long position. I've set my stop just a little bit below 1310.84, and I'm investing only 3% of equity on that long position. I'm making the position just a little bit smaller because of the bearishness from some of the volume indicators. But at this stage we have no indication that this upward trend from gold is over, and we still have a wave count which expects strong upward movement. The wave count has primary 1 off to the left of the chart complete, primary 2 an expanded flat over here, primary 3 may only subdivide as an impulse. At 1582 it will reach 1.618, the length of primary wave 1. Within the impulse of primary 3 we have intermediate 1 complete here, intermediate 2 a zigzag over here, intermediate 3 again can only subdivide as an impulse. The first target is where it will reach 1.618, the length of intermediate wave 1. If when we get to the first target the structure is incomplete or price just keeps rising through that first target, then we'll use a second target. At 1552 intermediate 3 would reach 2.618, the length of intermediate 1. Intermediate 3 again can only subdivide as an impulse. We have an impulse here for minor 1. I know this looks a little bit odd on the daily chart, but we do have a very strong first wave impulse up here for the Brexit day, a second wave correction, and when you look at it on the hourly chart there's a really nice third and fourth and fifth wave up in here at the end of minor wave 1. The strength of this Brexit day and the proportion of the second wave correction being more time consuming than its counterpart fourth wave up in here gives us first wave impulse, a three-wave look to it. That's actually pretty typical for gold, not quite to look like that, but it's typical for gold's impulses to have a curved three-wave look to it when the second wave corrections are more time consuming than the corresponding fourth waves further on up. And that may be about to happen again for intermediate wave 3. So intermediate 3 has to be an impulse. We have 1, a deep zigzag for 2, and minor 3 begins here. I've changed the wave count just a little bit today at the hourly and daily chart level. Instead of seeing 1, 2, 1, 2, I think this has a better look. I think minute wave 1 was over here and not here, and I've checked the subdivisions and the Fibonacci ratios on the hourly chart level, and it all has a really good fit, and it has a pretty good fit also at the daily chart level. And so I expect we have another 5-wave impulse complete here and a 3-wave zigzag complete here. The support line is redrawn as well from the end of primary 2 to the end of intermediate 2. It beautifully shows where downward movement found support here. We've got an overshoot here. That's okay. Sometimes these trend lines aren't perfect. We've got a little overshoot back here as well, but it's fairly close to where downward movement is finding support, so that may be enough to halt the fall of minute wave 2. We may be about to find that we're going to see upward movement start to accelerate this week if this wave count is correct. Minute wave 2, if it continues any further, may not move beyond the start of 1 below 1310.84. Let's have a look at how it ended at the hourly chart level, where minute wave 1 is this high up here. It subdivides 5, 3, 5. And so if this is correct, then we've got a zigzag complete down here. This confidence point is going to be important. It's the end of minuet wave A. If we see a new high above this point, then we can't see 1, 2, 3, 4, 5, an impulse developing lower, because 4 can't move into what would be first wave price territory. So a new high above this price point at any amount by any time frame tells us that this downward movement was a 3, and it tells us that it was over. So that would add quite a lot of confidence to the targets and the expectation of more upward movement. If minute wave 2 is over here, Then I have some targets in the text for you for minute wave 3. I won't go over these in the video, and one of the reasons I'm not putting it on the chart is I'm not expecting minute wave 4 to be particularly time consuming or deep. Like I said before, gold's impulses, particularly its third wave impulses, tend to have a rather curved look to them. They start out with deeper and more time-consuming second wave corrections, and then they end with blow-off tops. When the blow-off top arrives, it forces the fourth wave correction that comes just before it to be remarkably brief and shallow, and so offering a target for minute wave 3. I've done it in the text for you, but I don't want to put it on the chart. We'll go over it in the video because I don't think it's going to offer a good entry point to join the upward trend. It could be over much more quickly, and it could be more very brief and shallow. It may be a short, brief interruption to the upward trend before further acceleration to the end of minor 3. Now we could see blow-off tops for either minute 3, minor 3, intermediate 3 or primary 3. We could see more than one blow-off top on the way up. We might see 2. That's entirely possible. Possibly even we could see more, but I wouldn't really expect that. At 1513, minor wave 3 would reach 1.618, the length of minor wave 1. For now, while price has not added confidence to this wave count with a new high above this point, I'll leave the invalidation point down here at the hourly chart level as well. It is possible that my analysis of minute wave 2 as a complete zigzag is wrong. It is possible we could see a little bit more downward movement first. I do think that's less likely today, which is why I've added to my long position. I'm buying the dips on the way up because of two things. Because minute wave 2 was ended very close to the 0.618 Fibonacci ratio of minute 1, and it looks like price is finding support pretty close to the cyan support line, which I've copied over from the daily chart. It's sitting slightly differently here because the daily chart's on a semi-log scale and the hourly chart is on an arithmetic scale. At the weekly chart level, after last week's red candlestick coming with lighter volume, that added a little bit of support to the idea that we've probably still got an upward trend in place for gold. As price is rising during this upward trend, it's coming on an increase in volume. As price falls, it comes on a decline in volume. Although we did have an increase in volume here for this fall in price, yet it was still followed by further upward movement with a further increase in volume. And now for these red candlesticks weeks, we've got declining volume, and last week's red candlestick came on much substantially lighter volume, and so that still supports the idea that we have an upward trend in place because upward movement is supported by volume, which is exactly what we should see for the trend to be healthy and sustainable. On balance, volume at the weekly chart level still neutral, finding support at the purple trend line and resistance at the green. If we see a break above the green, that would be a really strong bullish signal from on balance volume at the weekly chart level. RSI is not extreme at the weekly chart level. There is again further room for price to rise. At the daily chart level today, we've got the small green doji candlestick coming on lighter volume. It's not really very clearly bullish or bearish, because a doji represents a balance between bulls and bears and indecision. It's overall slightly more bullish because it's green, and so the fact that it's coming with lighter volume could be interpreted again as somewhat bearish. Here we've got a fall in price overall now over 4 days, overall coming on a rise in volume, and that's bearish. It tells us that there's support for that fall in price. That's not always absolutely conclusive though for gold. Here's a good example. We've got for 3 days in a row a fall in price coming on overall an increase in volume, but this good strong downward day with a good strong increase in volume, if you cover all of this to the right, what happened afterward, you would have expected that price would continue further lower from here, but obviously it didn't. It turned on upward, and this rise in price was supported by volume. And so again, these 4 days coming on an increase in volume does give a bearish hue to this analysis, and that's why I'm advising extreme caution in entering any long positions here. If we do still have an upward trend in place, then we should be buying the dips. And psychologically, when we get back down to support, and I've added a support line here, showing where these downward corrections are finding support, it's really, really difficult when price is at support to enter a position which is opposite to most recent days' movement. So psychologically, that's going to be really hard to do. On balance, volume is still bullish while it remains above these purple trend lines. It gave us a strong bullish signal here, but we do still have this hidden bearish divergence between price making lower highs and on balance volume making higher highs. That tells us there's some weakness in price, but it's my experience that on balance volume works better with trend lines than it does with divergence. So I would give more weight to the bullish signal by it remaining above the trend lines than I would to the bearish signal with this divergence. RSI is hovering about neutral. There's plenty of room for price to rise or fall. That's not extreme. ADX is still declining, telling us that the market is at this stage not trending. This is a lagging indicator. It's based on a 14-day average. So with overall now 4 days of downward movement, it's not surprising at all that ADX is telling us the market's not trending. What's important here is it's not telling us we've had a trend change. The positive DX line remains above the negative DX line, so it would be wise to assume at this stage that this downward movement is a counter-trend pullback and not necessarily the start of a new trend. There's not enough evidence to tell us we've had a trend change. ATR is also declining in agreement with ADX. It's not surprising that these two are telling us that we're in a counter-trend movement. That's what price may have been doing for the last 4 days. Stochastics is returning from overbought. If we are in a counter-trend movement, we might be expecting further downward movement from price, only to end when stochastics reaches oversold and price finds support at the same time. The next reasonable support line would be this one here, which is about 1305 to 1310, bit of a zone about there. But in the first instance, I would expect this sloping cyan support line to offer pretty good strong support, and so that's another reason why I've added to my long position here for gold. That's all for me at the end after Monday's session, and I hope that all of our members had an awesome weekend and are looking forward to the next trading week.